Let's talk to another market expert who's got thoughts on oil and other things as well. She's Michelle Schneider, Managing Director at MarketGauge Group, and she joins us right now. Michelle, thanks a lot for joining us. We just had a conversation on the collapsing price of crude oil. What are your thoughts on that market?
Well, Julian did a great job of covering all the fundamentals from a logical point of view, but we know that commodities aren't always so logical, and a 20% correction is not necessarily unusual given the nature and volatility of all commodities. And even though oil may not necessarily be the thing right now, we're certainly seeing that in other types of commodities like orange juice and cattle and cocoa, et cetera. So, and we had the same situation actually in gold not too long ago, where gold had this deep drop from the highs, 20%. Everybody thought gold was dead, and here we are now challenging about the 2000 level. So I mention this as a backdrop so that people understand that you can look at the fundamentals, but ultimately you have to go forward. So right now, if you go back to June, when oil was dropping down around $70 to $67 a barrel, that's when Goldman Sachs, for example, came out and said, that's it, it's in a bear market and it's never going up. And of course, we saw it go to 95. So here we are at $72 a barrel. It is possible that $72 a barrel gives it a floor. We do have demand for next week in particular that could give it a goose. We do have India coming in with strong demand. As you mentioned before, we have OPEC Plus coming up. And we still, even though tensions have eased, we don't really know what's going to happen. Of course, we all hope that nothing traumatic happens beyond what's already happened in the Gaza situation. But really, basically, we got to look at the charts, right, Paul? That's, to me, what gives me the most comfort. If we hold 72 and we can get back through $76, $77 a barrel, then we'll be looking at 80. We go through there, then obviously the fundamentals will shift. If we break down under 72, I would be looking back at around that $65, $67 a barrel. I would really doubt it would get much lower than that.
What about gold? You watch that closely as well. 2000 has been the talking point on gold for a long time now. It gets there occasionally, but never sticks. What are your thoughts on gold?
Well, gold, of course, is reacting very much to really what's going to happen here with the overall economy, with monetary policy. The geopolitics obviously has been a little bit now on the back shelf, but also really what's going to happen with just really what's the Fed's going to do in the dollar. And so I think it's being extremely patient and strong at the same time. Now we're getting any dips are very shallow. So essentially it could sit here for a while. But what it's really trying to tell you is that it's possible that as we get into 2024 with talk of the Fed easing, that's actually going to be more trouble. The money supply is so low right now, the Fed has basically ignored that. Our debt is very high. At some point, it might be the Fed that has to buy it back and print some money digitally. This is what gold is sitting and basically licking its chops, waiting for. So if it gets through 2000, maybe it'll be another false start. But at some point, when the buyers really come in at the higher levels, because gold, when it looks good, has been selling off. When it looks bad, it's been a buy. When that flips, that's when you know that gold can really hit maybe much higher levels. I'm looking at about 3,000.
Okay, in terms of equity markets, one sector you like is healthcare stocks, medical stocks, including a company called Vaxcyte, which manufactures pharmaceutical products and vaccines.
Yeah, that has been a strong stock all year. Obviously, it fluctuates along with the market, but not necessarily as strong as the market's fluctuations has been. So right now, it's been basing out at a higher level, and it looks very ripe, especially if the market holds up here, which right now, that's promising, looking at small caps. That could actually really hit much higher levels as the year goes on.
And you're watching the small cap sector as well, the small and mid caps, as reflected in the Russell 2000 index. There's been a bit of a rally there. What's that telling you?
Well, that to me is everything in terms of the whole macro backdrop of the market. I mean, obviously, NASDAQ is NASDAQ, and it's sitting there at the highs. But if we look at the range that we've had, really, the small caps have gone from about 160, if we're looking at IWM, and then it was up at 200 in July, and now we're really smack dab in the middle of that range, while NASDAQ is now at the top of the range. So what that tells you right here, how important it is for the small caps to participate, because if they start going down from here, that will drag everything. But if they can get back up over 180 and closer at some point to the 195, 200 level, I think that's, regardless of what's going on, at least for the time being, is probably a very good sign for the entire market.
Michelle, thanks a great deal for a conversation that touched on a range of topics for investors. Michelle Schneider, Managing Director at MarketGauge Group.